This is Alan Bush with the Daily Financial Forecast for Tuesday, March 15th. Starting out with the stock index futures, we are seeing prices lower for a second day. This after on Friday, we did see some new highs for the year in the S&P 500 futures. Also, we did have several economic reports today, and they were, for the most part, in line. So we are seeing just a neutral influence from the reports this morning. Now, being on the trading floor just a little bit ago, the main topic of conversation is what the Fed may do at the two-day meeting starting today. And it does appear very likely that there will be no change in policy at this week's meeting. Longer term, though, we do feel that stock index futures are headed higher as interest rates globally remain still very historically low. And in the currency markets, we are seeing the dollar a little bit lower now. It had been higher in the overnight trade. It looks like there's a bit of an evening up session ahead of the Fed meeting. Of course, that's today and tomorrow for the Fed. Longer term, we do feel that stock index futures are headed higher and that the dollar index will be moving higher in tandem. Interest rate differentials still favor the U.S. dollar over all of the other major currencies. And this is a trend that is likely to last for quite some time. Also, in the British pound, we are seeing a lot of pressure developing. Again, still plenty of concern and worry that the UK could exit the European Union with their referendum to do that, scheduled for June 23rd. Also, we are seeing some good gains in the Japanese yen, with the Bank of Japan concluding a two-day policy meeting today and refraining from adding more stimulus. So this helped the yen from an interest rate differential point of view. However, the Bank of Japan did leave room for the possibility of additional stimulus somewhere over the next couple of meetings. Now, moving over to the interest rate futures markets, we are seeing prices higher. This primarily due to weaker energy prices, with crude oil under some pressure, weaker stock indices. So those two influences helping the credit markets today. Also, the probability of a rate increase at the June meeting is at 49%, and the probability of a rate increase at the December meeting right now is at 77%. We do feel that the fundamentals are, for the most part, offsetting for the credit markets. With that in mind, though, I would be trading the stock index once again from the long side, the dollar index from the long side, and the British pound from the short side. So good trading, everyone. And once again, remember, these are my opinions alone and are not the opinions of ADMIS or Archer Daniels Midland.